Hey everyone, welcome to, oh my gosh, the market crashing. It is not pretty out there, one bit at all. And it's like, holy smokes, what the heck do we do? Well, we do the best thing possible and we look at it, we stare at it, and probably do very little other than buy. Let's take a look at all of the insanity that is going on in the stock market and what, if anything, is actually going up. It actually does look like we have some things going up. So why don't we start with maybe the things that are going up, because there are so few of them that are going up. All right, let's take a look. So we've got AMC. Yeah, the AMC bus is going up. AMC is up 7.1%. We've got Win up about 2%. Again, that's sort of travel and retail space here with Win, the Marcus Group, also another movie theater chain. We've got Simon Property Group, the mall chain, Marriott, Macy's, Wells Fargo is even in here, American Airlines, again, Starbucks, Disney. I mean, this is really the epitome of, oh, here we go, having that balanced portfolio is really showing off today for having a balance of recovery stocks. Now, I don't. I'm personally today, a day like today kind of makes you wish you did. So that way you had a little bit of green. Because if we go over to tech and EV, we have a whole lot more craziness going on. The market is beautifully selling off. And so these are the kind of days that you look at, or you're like, maybe there's an opportunity here, like a crisis-tunity at this point, because this is a pretty solid sell-off here. Take a look at some of the damage that we've got. Obviously, yesterday we went deep on why Churchill Capital adjusted about 30%. That's because we had about a valuation change of about 30%. And that's the danger of buying a blank check company too high, because you don't actually know what the valuation is going to be. But that's okay. We're still, many of us are still very well up on Churchill. But then you're going to add about 8 percentage points, probably even a little bit more, like 10 to 12 percentage points for the rest of the market selling off. And Churchill's obviously going to be along with that. So you've got ZOM, BNGO, API, Nano Dimensions, all down 14 to 12%. You've got Matterport down about 12%. Big old corrections. These are really actually great opportunities. Then we've got, look at this, NEO. NEO is about to be under my buy big target of under 45. I mean, we are just going straight down in this market right here. The market really looks like it just got spooked. Within the last 30 minutes here. Within the last 30 minutes, it's probably like every Robinhooder got up. And here you go. 30-minute pre-market trading has led to a collapse here, essentially. You've got Tesla down another 7%. You've got cannabis down. You've got EXPI down. Obviously, you can't day trade anything, or I mean, you could with if you wanted to short things, but that's not going to be good for here. EBIX, yeah, this is I think this is about where we bought it for. Volume's super low here, so we'll see what happens here. But I'm not super excited about an opportunity to really swing trade this one, given the state of the market right now. So we'll see what happens. But let's listen into the bell. It's going to be really red with some green.
Me too.
Green for recovery. It's actually less red than I expected it to be. Look at that. You got a lot of green for that recovery.
Grocery stores are going to have it tough too. B of A cuts Kroger today to underperform 28 target as they see Jim more promotions and tougher margin risk. There's a look at the S&P and the NYC and the NASDAQ. Although, Jim, it cuts off.
It's actually not as horrible of an open as I expected, given the massive selling off that we're seeing, at least that we saw in pre-market. So let's actually see how this ends up translating over. Okay, yeah, I mean, that is how we are opening. Let's go back here. We've actually got even more of a sell-off here at the open. Look at the red candlesticks that we're developing right into the open here, with EXPI also dropping 10% here. Some real movements to the downside here. Absolutely incredible. Let's see here. Let's see what I'm gonna do really quick. I'm going to quickly especially with how low things are right now. I'm going to pull all of my margin right now and just have it available in cash. So I'm going to pull everything I got on M1 Finance, for example. And let's see here. We're going to create a borrow, a one-time transfer. And this is in my, I like doing this and I like keeping the funds ready to go. Of course, the darn thing is lagging right now. But yeah, I just go over to my borrow tab on M1 Finance and I take out everything I have available, which in this case in margin is about 525K. So we're gonna, for M1 Finance. So I'm going to transfer that over. Cool. All right. So that way that is available. And then I'm not at the point where I would draw down on any kind of credit lines. I think at this point we just have a nice correction isolated here to probably the tech sector, the basically every sector that the way it looks like the sectors that have done very well throughout the pandemic are having a little hissy fit today. A nice hissy fit today. So let's take a look here and let's see how much damage is being inflicted here. So we've got Matterport 12%. Nano, yeah, okay. This is very similar to what we saw. We've got an open sell-off, but actually a recovery that's trying to form on some of these stocks here. Let's see here. Churchill also big down arrow. But trying to recover. Remember, we got this news in after hours yesterday, so we'll see how a recovery goes here. We've got AMC actually leading the way, up 12% right now. So if there were something to trade, it looks like AMC is going to be a swing here, or have that potential. Let's see. If we zoom over, let's look at the volume here quickly. So let's see here. Let's go to the opening volume here. So yesterday we had opening volume at AMC of around, let's see, 4 million shares, 4,500,000, 100 or 1 mil, 1.4, and then we kind of had a run going into 400, 500,000 in volume. Right now we're sitting at 15 million, 3 million, 3 million. I mean, we're 3x the volume today. And I would imagine the volatility, the Vix Volatility Index is pretty high. We'll look at that in just a moment as well. Let's see here. Okay, here's a thing I forgot again to write this note, so let me write this note really quick. Want all of Kevin's buy sell alerts during the market crash? Get 38% off with coupon code. It's actually surprisingly, check out Stocks and Psychology of Money. In the red times is probably the most important time to be to have a really good group, a good support group with you. Not just a good support group, but also good guidance. So because it's times like these that when you look at your portfolio, things can feel very painful. So let's see, AMC, but what we're seeing is really a big de-risking right now. AMC's got volume, but remember, this is also a very dark day, a very red day. We're going to see a lot of overcorrecting, in my opinion. Let's see how things develop here. So I want to go to recently viewed as well. Let's get some of the recently viewed stocks in here. So Orbital Energy Group. Wow, we were just talking about that one yesterday. Down substantially here, 17%. Ehang Holdings, 13%. Look at that. Plug Power selling off. There goes EBIX. That's going to end up turning into a correction hold. We've got Tesla. Look at the free fall here on Tesla. Absolutely horrible. We've had a little bit of an opening here that was green. Slight moment of green, despite the sort of sell-off here in the pre-market. Pre-market really opened up down. Somewhere around 5%, it looks like. We were down from 714 to around 677. An instant open down. I mean, there was no chance here. It was just an instant open down. This is, as they say, the elevator down in the stock market. Feels very painful. But yeah, market is going straight down here. We're at 652 on Tesla with no sign of slowing down right now. We've got NEO substantially down over my 45, my buy under target of 45. So we are down on NEO. We've got Matterport also selling off. The ACIC, the UAV Archer company, they are down 15%. The stocks I bought yesterday, some of those are obviously down right now as well. Look at this Palantir revisiting $25. Etsy right under $200 now. Let's see, Enphase 157. The continued sell-off here. So really what you're getting is, I'm actually interested, or surprised rather, I should say, that you've got Spirit Airlines, Dave & Buster's also down. Nice plummets here. Let's see here. You've also got Bitcoin. Bitcoin is down to 48,000. So the belief of and we knew this, but we knew that Bitcoin was not a hedge against the market. There's a belief that maybe Bitcoin is a hedge against inflation. But once you have inflation worries, you tend to have a market adjustment. And when you have a market adjustment, Bitcoin tends to ride with the market. So we do have Redfin earnings coming up tomorrow. Redfin now down at $88. Obviously, the market in a downtrend, it's not going to be super excited about earnings. Sometimes it can be temporarily when we see these. We got Forest Road, which there was a lot of excitement for yesterday, but along with the rest of the market, no exceptions really here to the entire market falling. Tattooed Chef falling below $20 a share, and Enphase down. Yeah, you've got a lot of negative excitement, I like to call it. You've got sort of a bloody setup here of pain. Let's go expand and go out here. So we got Microvision retracing back to $15 a share. And so these are, let's talk strategy a little bit here for a moment. So in these opportunities where the market is correcting, oftentimes you have an opportunity here to rebalance your portfolio towards your highest conviction stocks. You don't have to. Sometimes the best thing to do is nothing other than add to your portfolio during these painful times. That'll prevent you from selling and just sitting on the sidelines. Because what a lot of folks will do in a situation like this is sell everything or sell a lot of their holdings for the feeling of, oh my gosh, I've made a mistake. I've made a massive mistake. And then we end up hitting some form of a bottom in the market, and then we recover. And oftentimes timing that is very, very difficult when emotions are high. And what happened during the March crash, for example, was we saw days like this. And while it felt like while you were adding money to this kind of market, it felt like you were throwing money into a fire pit. It was actually the best thing that you could be doing. So let's take a look here at, let's understand what the VIX is today. And let's pull up the Bloomberg terminal as well. So the VIX is up 7%. Let's take a look at this. Pull it up right here, actually. It's going to be a little easier. One sec. So let's look at the Vix Volatility Index. The cool thing about this is it's going to really tell us when there's fear in the market, which obviously there is today. Okay. So what do we have here? So if we go out to the 5-day VIX, obviously it's up. It's up about 7% today, the volatility index. But if we go out a year, we're nowhere near. Let me increase my volume here. Okay, sorry. You might have to do a little adjustment there. I just realized I was a little low. So anyway, hopefully that's a little better for you. But anyway, if you go out a year, you can see that the increase in the VIX here is actually extremely nominal, which I don't believe that we're going to see a fear index like what we've had over here. But this is very reminiscent of that September crash that we had, where the VIX did go up to about 33 at its high. And we also had a lot of volatility here right before the election, where the volatility index went up to about 40. We had a lot of fear based on the belief that the election would crash the market right here. And so we went up to 40, went up to about 33 there in September when we had our last tech sell-off. And so we're back into that zone now. It's entirely possible that this VIX goes up another, 7 points or so, which obviously if this went up to 33 divided by 25 means that this index could increase another 32% or so in terms of volatility. It's possible that we're not seeing the VIX moving up this high right now because we do have recovery stocks that are green, barely. They're surviving, right? I mean, look at this: AT&T hanging out, Starbucks hanging out, J.P. Morgan, no sweat off my back. Wynn Resorts, Disney. You've really got the recovery sector here doing absolutely phenomenally. And by phenomenally, 1% can be phenomenal in a market where everything else is selling off, right? You've got positive in an ocean of darkness. Although not everything is insulated here. You've got, obviously, you're going to have some people taking profits out of, let's say, like a Cheesecake Factory or a Costco or even a Dave & Buster's, and rotating that over to some of the sort of more deep sell-off reports here, which we have a lot of deep selling right here. And we do have a little bit of a recovery occurring now at Churchill Capital. We've got Churchill Capital now moving up off of its low here of 34. It is under $35. I'm going to go ahead and execute a purchase here of a little bit. Let's go put a market purchase in of, what do we have? 1,000. Let's go ahead and throw in, I'm going to throw in 1,250 shares here. We're going to do a market order at 1,250. We're going to unlock trading here. And let's go ahead and add a little bit. Never squander a red market. So we're going to go ahead and buy a little bit of CCAV. It is under 35, by the way. This company has about, golly, this would have about a $55-ish billion market cap, which is less than GM and NEO, but it is more than XPeng. So you are paying more than XPeng for this company, just relative valuation. So again, you're at about a $55 billion market cap. It's, of course, still a SPAC, so you're still going to have volatility. But I do think you have an extreme amount of selling pressure today. I got to send a quick alert to course members. So during the day, just so you know, when yesterday, for example, I posted a lot in the stock market alerts. I'm going to send a quick alert out. Just bought 1,250 shares of CCIV at about 35. Okay, there we go. Send that alert out. Okay, good. So let's see what else we want to do. There we go. Okay, good. Put some emojis on that. Perfect. All right, so let's continue on to see what's going on with the market crash. Again, this kind of environment, and I don't want to sound like trying to shill this here, but this is the perfect kind of environment that you want to be in a group where you can stay level-headed, where you can talk about what the heck is going on. And I do believe that the money group that you can get with that coupon code down below is a really good opportunity, because you're going to get my alerts through this, and you're going to see when I decide to buy. You're going to see if I decide to make any changes with my portfolio where, okay, maybe we're going to take some money from here and move it over to something else. And those can be very, very important. Okay, so we've got a red candlestick coming back at Churchill. So a lot of volatility is going to be expected today. We've got Switchback Electric. Look at this, 20% down. And these are not stocks that had a valuation change either, right? Like Matterport, no valuation change here. Still obviously up on Matterport, but I mean, look at Matterport running down to 17. 17, folks. If this goes under 15, you've got some beautiful opportunities to pick up. Gores, for example, the Matterport SPAC. There we go. So yeah, and it's gone. nice red candlestick here. So obviously a little bit down. Again, when you buy in this sort of market, it can feel like a red you're throwing money into a cash pit, and that is okay. Let's see what else is suffering right now. Not a lot of pain over here at, for example, Target, Walgreens, holding nice and firm with only down about 1% here. Darden, Carroll's, Microsoft. And see, this is why, folks, people like saying, hey, I like having my what are known as the cash parks of Amazon, Alphabet, and where's Apple today? Let's see. Apple might be down a little bit more. And that's because these are now stocks that if somebody wanted to, Apple down a little bit more at 4%. These are stocks that could be sold to rotate into maybe those that are having a little bit more pain. But right now, I'm not in the position of selling anything. We've got, if anything, I'm going to be adding here. We'll just continuously sort of be adding to things. We've got Bitcoin coming down about 7%. Looks like Tesla is really selling off the hardest here. Tesla really retracing back to the low 600s now, which it never had any support in the 600s. Let's take a look at Tesla and see how much pain there could be at Tesla. So Tesla, for example, if we go back to really the last level of support, well, we had a slow run in through the 5 and 6, but that's not really, I think, where we had support levels. I think we had much more support in like this 390 to 400 range. Yeah, okay, 379 here, 430, 450, 400. A lot of support over here. 329 looked like a more of a brief dip, and this is really when we got the 4 split period here. So 375, 420, right around this sort of range here is really where we had strong support for Tesla previously. So let's draw some lines down. There we go. Okay. Perfect. So it wouldn't surprise me. I'd like to drag that over a little bit more. Wouldn't surprise me to see. I don't think we're going to go as low as these values, but I think that is where we have a potential for future support. So we're right around here. And let's go draw another trend line here. Let's just pull this out. There we go. So we're out here. This is where we really have stronger support. It does look like we have some light support right in this sort of region over here. But it looks like we're going to be breaking right through this. And we are right now. So we're kind of breaking through this, which does mean there's a chance we might fall over to this region here, the 450 region, which great opportunities to add, obviously, to Tesla, some of these stocks that are selling off as incredibly as they are right now. Churchill Capital is accelerating its sell-off here with Gore's Holding selling off. Let's go back to the minute interval here. By the way, the best thing that you should do at this point is not look at your portfolio. I know there are a lot of folks where I see a lot of comments about folks saying, "Hey, folks, oh my gosh, I'm down $17,000. I'm down X. I've lost this amount of money." Well, you haven't lost anything until you go to sell. Now, I know that doesn't necessarily make you feel better during this kind of market, and it is painful to add to a market like this. It's hard. The hard thing to do in a market like this is add to stocks, but that is oftentimes one of the best things to do, especially since it can prevent you from selling. So very interesting though that the stocks that we do consider more of a cash park, like the Googles and the Amazons, are actually doing substantially better relative to the rest of the tech sector. So it really shows you here, Amazon just down 2.5%. We've got, where's Google again? Let's see here. Yeah, there's Google down 2.8%. Still pain, and the market is still trending down. You've got even Qualcomm trending down, but less pain here than you do at sort of the higher valued tech companies. Let's look at where Square is what Square is doing today. Square is certainly much more stretchy and lofty than some of the others. Yep, okay, well, that makes sense. Square is down about 12% today, right back actually to the 230 range. So it looks like that run to 270, 280 has essentially evaporated. We've got Xpeng also down 13%. So no safety over here in the overseas market. The Chinese stocks are selling off just as well. We've blown right past our $45 targets on NEO, and we're now sitting at about 42. Much more reasonable levels to be adding to these companies, which is nice. Matterport is retracing to about that $15 level. We're at $16 right now. So nice opportunity there at better pricing. Microvision, for example, also under $15 per share. Let's see here. Who's reporting earnings today? Oh, let's look at Shift. What's Shift performing today? Shift is also down about 13%. It looks like really no safety in the market right now, with the exception of those recovery stocks. Let's go ahead and pull up the Bloomberg terminal And let's see what's going on here. Let's also, just in the meantime, we'll pop on over to CNBC while we wait for to log into the terminal. Let's just listen to what's here's something that's up 3%. Let's listen to something green for a moment for a change.
Well, first of all, let me address the patient situation. It is a tragic situation, and Medtronic, as well as some of our competitors, are working with the different physician societies and the hospitals to get campaign public messaging out there. Matter of fact, Medtronic with the American Heart Association sponsored a campaign called "Don't Die of Doubt." Encouraging.
Don't die of doubt. That has nothing to do with what they're talking about, but it's a good thing to talk about right now in the market. Don't die of doubt in this insane market. Yeah, that's the thing, is even a diversified portfolio can be in pain right now. Let's see. Let's refresh here. I want to see the day. How are we doing here on the day? So on the day, yeah. Even the M1 Finance pies are down about 1337's only down 9%. That's all right. So let's go ahead. I'm pulling up the Bloomberg terminal. We'll kind of get to see what Wall Street is thinking. But yeah, a big correction, obviously, in the markets today. There's no kidding about how painful a period of time like this can be. We've got a little bit of a bounce here coming off of the bottom for Shift, an 850 bottom for Shift, and now tracing up again. We've got Etsy trying to find a bottom here. We've got API. API actually found a bottom. It went down as low as $83 and is now over. It's actually above my purchase price for API. My purchase price for API was 72. And API, here we go. Okay, now we're starting to see a little bit of a recovery here, which is nice. We want to see that. Let's see if Etsy traces up. What do we got? Tesla's recovering a bit. Tesla's bouncing off a low. Okay, now this could obviously continue an acceleration down, so you do have to be careful as we see a red candlestick form here. But this is going to be an opportunity where I'm going to add a little bit to Tesla right now. We're going to take, what are we going to do? Let's do 150 shares. Let's see what that gets me at market. 95K in, okay. So obviously you could see I'm making larger purchases on these longs than I would on a trade. Let's see here. And these are going to be, these, by the way, are going to be the things that I'm not obviously going to be live all day long, but these are the sorts of things that you're going to see me alert in the group, in the Stocks and Money group. And there may also be some stocks that I end up selling, and I'll be using those and sort of redeploying that money. So I'll advise on those as well. I have a tentative strategy, but we'll probably talk about that tentative strategy in the 9 o'clock course member live stream. And it'll actually be very important, especially if you're investing in companies that I think you're probably investing in, some of the ones we've mentioned here. There'll be a nice little transition opportunity. So the role assignment is up and working again, by the way. But let me quickly send this a notification. 150 shares of Tesla just added. There we go. Oops. Tagged myself and not course members. There we go. Okay. All right. Perfect. There we go. So let's see here. Let's get back. Let's see what happens. Since somebody says they have a lot of call options. Yeah. So 2 days ago, I actually released a lecture about options in the Stocks and Psychology of Money group. And I talked about the danger of being too heavy on margin. And one of the reasons I keep my portfolio under 10% exposed to options. And even though I go with long call options, implied volatility can absolutely destroy option pricing. So on a day like today, you could really get hurt with your call options substantially more than you can get hurt with your shares. Today is not a bad idea to add to call options if you are not already over 10% exposed to options, in my opinion. I think options pricing for call options is going to be in your favor on a day like today. So it looks like Matterport has bounced off its low of 1581. We've got a recovery happening right now in the market. We've got Switchback Electric is also recovering. Matterport's recovering. We've got CCIV is right now still struggling to find a bottom. We did hit a low of 30. I did add a little bit. I want to see exactly what that thing executed for. I think it was 35. Doesn't really matter. A couple bucks here or there. Not in this kind of market. This is not the kind of market I'm going to be trading. This is just the kind of market that I'm going to be adding to my fundamental positions. So let's see my positions. CCIV. Oh, that shows me everything. Okay. Oh, here we go. Okay, here we go. So CCIV. Let's see. I'll go ahead and pull this up and I'll share it so you can see it as well. Okay. Oh, 3510 is what it went through. Okay, so a little higher. Is that it? Nope, that's the wrong one. Here we go. So you can see this has gone through one heck of a roller coaster. This is now at a market value. It's still up. It's up about $350,000, up about 64%. Yeah, and so that is now taking a total cost because I've increased my cost basis. My total cost is about $524,000. My average price is now up to about $20 per share on this. And with my last purchase there at about 35. It does look like we have a little bit of a recovery coming through, just looking at what's happening there on the valuation. So let's go ahead and see. Yep, we've got some green candlesticks coming here. So we're going back to about 35. We're at about 34 now. We've got, let's see here. Okay, GTC, Simon Property Group. Simon Property Group turning negative a little bit here. Walt Disney only slightly negative. So let's see what else we have. Okay. Yeah, for any selling strategy, again, I'm going to be talking about the selling strategy that I have. And I haven't actually executed yet, but I have some plans. This is sort of what I call break glass stocks. And we'll probably be doing that at the 9 o'clock live stream. So stay tuned. That'll be the course member live stream. And then that way we'll do a little bit of selling and repositioning, which will be fun. So let's continue to look at the potential for recovery here. Planet 13, the marijuana stock, down substantially today. No end in sight here, sort of on the pain. In the cannabis sector, the cannabis sector has just been absolutely obliterated in the last really about 2.5 to 3 weeks. I think every cannabis stock, even going back towards the election, is starting to cut into any gains that we've had from the election. I do think we're still up from the election, but we're definitely now suffering some downs. So QuantumScape is found a bottom at about 50, trying to recover, but we're getting a little bit of a push down again. Yeah, today is not a day for attendees. I don't know what my average price is on Tesla. And since my Tesla stock is in like 4 different brokerages, it's not that easy to find out. Let's see here. We've got Cape. That was one of the recent SPACs here that did not partner with ARK Invest. That is down substantially. Let's compare for a moment. We may as well. Let's see if we can get ARK-K. So ARK-K today down about 8.41%, kind of following. Really following right along with Tesla here. Tesla recovering nicely. A nice recovery here at Tesla. The support was really close to that first support that we drew for Tesla. It almost bounced off the line that we drew. It went a little bit further. Yeah, look at that. Yeah, so we're not pushing down to these levels of support. We pretty much bounced off this level of support here on certainly on the day. Let's look at the hour candlestick. Yeah, even on the hour candlestick, we're not really hitting that candle because we are still in the market open hour here. We're just in the first 30 minutes of trading. We've got a nice recovery happening here. So that is potentially a signal of at least a bottom for today. Who knows how long that bottom will actually remain. Let's see if there's another opportunity to add to something here. Very good food company down another 10%. Social Capital, Redfin. Let's see if Redfin's bounced off. Yeah, Redfin's bounced off the bottom as well at about $87. It could be a juicy stock to add to. Set a quick alert. Let's see here. Finance members, private alerts. Okay. So what else do we have here? We've got still trying to get back to that $35 level here on CCIV. Keep this in mind. We've got a 30% correction due to a 33% revaluation at Churchill. And then you've got this about 10% sell-off on top of that 10 percentage point sell-off on top of that, due to obviously the overall market correction here that we're seeing. We've got Tesla down now just 8%. So really trying to recover in the day here. Might be an opportunity to try to add a little bit more to Tesla, for example. You've got what else is trying to catch up here? Looks like everything's really trying to push back up. The exception of Churchill right now is lagging a little bit behind. But let's see, what's Palantir doing? Palantir heading back to $26 a share here. Open Door also down about 7%. Also recovering. We've got a really nice V-shaped recovery here on the day. So we've really started to retrace back to the market open, but we're obviously still down from the pre-market session where we had a nice sell-off. So the market is softening, which is good. You've got ZOM also recovering, down up from its pretty miserable lows here of $1.30, $1.33. If you have not added yet and you have considered selling, hopefully you did not sell in any of these low positions, and hopefully you are adding in some of these into some of these V's. So looks like AMC, while it's up 8%, it's also followed this sort of V-shaped pattern here, and it's selling off a little bit right now. It's possible that something that you see in these events as well is you see people take their money out of trades, short-term trades, and they get into these longer-term value trades that are selling off here. Let's listen into this for just a moment here.
90 improved over that expectation, 91.3. This is the best read since just under 93 that was in November, and there was a subtle revision from a little over 89 to a bit under 89. Now, if we look at present situation, 92.0, that really jumped, and 90.8 on future expectations. When it comes to the Richmond Fed, this is also a February number, expecting 1.515. We ended up with 14. So we had back-to-back 14s, Jan and Feb, and both of those numbers are the lowest levels going back to July when we were 10. Seema, back to you.
Rick Santelli, thank you. Joining us now as we await the start of the hearing is Ed Yardeni, president at Yardeni Research, and Abdur Namiri, head of...
All right, so let's take a look here. It does look like Powell did speak, or at least release a statement here. Let's go ahead and take a peek here. So Federal Reserve Chairman Jerome Powell underscored the U.S. economy's ongoing weakness. Ongoing weakness. Why are you bagging on our market, homie? Let's see what else he says here. This is very important when the Fed speaks on a day like today. So let's see here. In remarks that suggested the Fed sees no need to alter. Oh, excuse me. So it looks like the Fed today, in remarks, reiterated the plan not to raise interest rates anytime soon. This is something that we expected. It looks like his remarks came out, at least this article published within the last minute here, at least it was updated last minute. These probably came out and actually helped create this V-shaped recovery that we're seeing in the stocks right now. So Powell's comments are in contrast to the increasing optimism among many analysts that the economy will grow rapidly later this year, that the outlook has also raised concerns of a potential surge in inflation fueled by a sharp increase in longer-term rates, right? So Powell does not believe that we're going to see rates go up. He stressed the personal hardships caused by the pandemic. Pace of improvement in the labor market has slowed. Let's see, rising interest rates typically reflect optimism that the economy is poised to expand more quickly, but they can also weaken growth, especially if the Fed were to respond to rising inflation by raising the benchmark rate. Jerome Powell is really here to reiterate that their easy money policies are here to stay, especially through the softness that we're seeing today. And they do think that that has helped create a little bit of a V-shaped recovery in the market today. We'll go ahead and have the news hub open here as well. All right, there we go. So what do we have here? By the way, the best way to not get disappointed about your portfolio is to add to your portfolio, even if you just add a little bit. Megan McCain's video. Okay, that doesn't matter right now. Let's go back. And he's live in Senate testimony. He must be. Let's see. I will jump on over and see if there's actually anything we could see. Let's take a look here. Okay, that's Health and Human Services. It's not the one we care about right now. So I don't know if he's live anymore. I'll keep an eye on this. U.S. Senate. Here we go. Okay, I'll wait for this to pop. Yeah, here we go. So this is just so you know what is going on over here. At least this is in the
hindering
Senate.
any company whatsoever, except we have an awful lot of hard rock mining that's gone left unclaimed.
Okay, yeah, they're talking about energy here. Let's go back to the candlesticks here. So Jerome Powell may have made a statement, and he's not talking anymore right now. So let's go ahead and go back to the candlesticks here and try to get an understanding of what's going on. So we've got a little bit of a U-turn here on AMC. AMC is following that sort of a V-shaped recovery and turning it back into another negative here. We do have another red candlestick forming here on CCIV as well. Planet 13, no exception here on the cannabis stocks, BNGO. A little bit of a red candlestick coming right now. Very good food company has sold off almost directly down. We've got Sundial, which we had a big course member alert about the very good food yesterday. So hopefully you got that. So let's see here. Gores, Matterport. Look at Matterport. Very, very strong recovery on Matterport. This is the kind of recovery that you buy into. So the purchases, the couple purchases that I made, mostly the Tesla one, has performed well at this point. The Churchill is done. Churchill's slightly down. API, ironically, is up from where we bought it. I'm sorry. No, it's down slightly. It has retraced down a little bit. But it's pretty dang close to that 72 figure. So you could see the volatility just within the day here. Potentially another little bit of a buying opportunity on some of your favorite stocks. So let's take a look, for example, at EXPI. It looks like we broke 60 for a moment. And that is my buy under target. We've got Lemonade at 124. Still a pretty incredible price for Lemonade, honestly. So where are some other opportunities to go shopping? Let's see here. Okay, Starbucks, 30%. We've got Dropbox. So Starbucks has actually turned negative now. Starbucks has turned negative on the day. We've got Dropbox selling off again, but really only about a 0.75% or 0.6%. We've got this 1% loss over here at the Google, the Amazon, the Walgreens. Our cash parks are doing very well today. American Airlines, good. Salesforce has sold off so heavily. It's not a surprise that we're not seeing more of a sell-off at Salesforce. Well, 3% is still obviously a down day, right along there with Apple. Peloton is one you would expect to be doing much worse. Look at that beautiful V-shaped recovery here on the day here. Really, really good recovery. This goes to show that there's still a lot of enthusiasm in the market to buy in and take advantage of these lower prices. This is all pretty much buying activity here. Wow, look how low things have gone. Let's buy. Very good. That's the smart thing to do. So very good. Let's take a look at Tesla. Look at Tesla's recovery here. Very, very, very strong recovery. I'm actually going to add I've got such a heavy Tesla position. I'm tempted to add right now, but I'm not going to add to Tesla again right now, just because I'm so concentrated on Tesla. I'm going to add to something else here. Let's go look at some more of our losers over here. So did Matterport go back over 20? No, Matterport is sitting at 1879. I might add a little bit here. So let's go ahead and place a market order on Matterport. And let's put in a little bit. What do we want to grab? Let's grab 2,000 shares of Matterport. Okay. Not 20, 2,000. It's a difference. It's quite a difference. All right, perfect. So let's see here. GHVI. Good. Powell will not bend to the banks. Powell will not bend. No, he strongly believes. Here's the thing. we're going to see corrections like this. We're always going to see corrections like this. The worst thing to do is panic sell. And again, oh crap. Okay. For anybody who's a course member, we're actually going to have to do the course member live stream at 8:30 today. So yeah, I'm going to make a quick little note on that. So live will be 8:30 to 9:30 today at PST. And so in that course member live again, I will be selling some shares, and I will be repositioning those. And so I'll be talking about when it or which stocks it's okay to sell in an environment like that. So again, use that coupon code if you'd like, and check that out. This is exactly the time that you want to invest in yourself. Let's see. This is on Twitch as well. Okay, so look at this. We've got the Churchill Capital Group run here. So Churchill is now running off of this. I did add to this at 35. I'm not going to add more at this point to CCIV, but I would. If I hadn't added yet, I'd be okay adding to CCIV. We've got, let's see, Ocugen. Ocugen's actually suffering a red candlestick here. We're going to wait on EBIX for the just the overall market recovery here. We're not going to sell EBIX into this kind of drama. So let's see here. ACIC. ACIC also got the nice V-shaped recovery. This goes to show you the power of the Jerome Powell coming out. So I'm glad we did a little bit of buying in the V. We were able to pick up Tesla somewhere down into these lows. Tesla recovering. So that was good. But you can't always perfectly time it, right? We bought CCIV at 35, which wasn't exactly the super low, but that's okay. Etsy back over $200. So Etsy's recovered back over $200. Where's Enphase today? Enphase today. Enphase. And keep in mind, we could continue to have volatility throughout the day and the rest of the week. So you don't want to blow all of the cash that you have available. Somebody says their portfolio is only 5% down. Feel kind of lucky. Good. CCIV call in 18 minutes. Where? I don't know that I might cover that after the fact. But yeah, let's see here. Yeah, CCIV I think is a great opportunity and certainly under 35. Under 35, under 30. Oh my gosh. Yeah, I'd continuously add to that as I did. Okay, Nano Dimension $11. Also, had a very nice V-shaped recovery here, softened again, but then it has recovered a little bit again. Where is Bloomberg for a moment? Let's see the Bloomberg terminal here. So let's see. Plans to resume normal deliveries for oil. Okay, these are Tesla drops as much as 13%. Well, that's over. That's already old news because it's only down like 6% now. Apple will unveil 2 new MacBook Pro models this year, say analysts. Oh, some nice distraction news, I call it. Distraction news from the madness of the market. Tesla rival Lucid Motors to go public in $24 billion mega SPAC. Yep. So, folks, I want to. This is very important. So, take a look at this. I'm going to show you. This was my Twitter yesterday. Remember to follow me on X session. Oh, Elon. Remember to follow me on Twitter at Real Meat Kevin. But take a look at this over here. So I put together a thread here of why CCIV sold off today. And this is a really good read, and it's really good information to go through because there are a lot of folks that are looking at the slide deck presentation, which I mentioned here, and I think it's attached to one of these here. Let's see here. One of them has it. The slide deck presentation actually provides valuation information that's wrong because the slide deck information is actually already dated. The slide deck was accurate as of February 19th, but the valuation changed. I added to Daniel here. I agreed with Daniel. And here, see, the SPAC presentation is accurate as of 2/19. Sounds like the valuation changed today. So that's very important to keep in mind. And so we're reiterating that $24 billion valuation at $15 per share, which is a 33% increase in that valuation, which we did expect that potential for happening. I got a lot of hate for saying about. I think it was on February 16th I released the video. Here, I got a lot of hate for the video. Let's see, what's it called? Oh, Jerome's right here. Let's pull up Jerome for a sec. Oh, so they're having their testimony here. I'll pull up Jerome in just a moment. That's not so important, though. We know what he's saying. What do I want to type in here? What was I going to do? Oh, yeah, meet Kevin Lucid here. So right here, this is a very good video to watch from a week ago. There's a good amount of hate in the comments on this one. So testimony happening here, not jumping up and down too excited to jump into this. Although let me see if I can pull it up on C-SPAN. I do want to spend more time though on the candlesticks because I think there are going to be more opportunities for us. So we will come back. Let's see here. Okay, yeah, we've got multiple panels going on C-SPAN, but none of them on Jerome Powell, at least on the C-SPAN website. Okay, so no worries. Let's go ahead. I want to look at the sticks. It's a little bit more important right now. Let's look at the sticks. So somebody says MSTR. MicroStrategy, red candle sticking down again. We've got Churchill Capital, also red sticking, had a little bit of a red candlestick here after running up to $38. Let's see where Tesla is for a moment. Tesla, let's see here. Tesla right now, yeah, okay, stabilizing here. So creating a new level of support here on Tesla. Okay, 1 second. There we go. Okay, good. So let's take a look at where we're getting support levels. Where, Kev, Mini, where's the CCIV Zoom call? Where did all the institutional buying going? Institutions tend to buy very early in the SPACs. Probably in that, you know, if they didn't get an allocation, they probably got into CCIV somewhere between, I would guess, $15 to $25. So Tesla building a new level of support. This is also very important. So let's see here. Okay, so we're creating support right here at about 668, 670 for Tesla. Oh, thank you. Okay, I wonder, I can probably, oh, you sent that on Twitch. Darn. A little harder for me to copy and paste from there. No, it's not your fault. That's all right. I will get it. All right, meet Kevin. Not logged in on Twitch, so I can't get to the comments. I see the comments, but I don't have it as quickly available. Oh, it doesn't load the past chat when you open it. Oh, that's lame. Thank you. Yeah, if you could drop that on YouTube, that would be great. I could copy and paste that link. Okay, how long do you think till a rebound? I'm very close to panic selling. Well, we've actually already created a rebound here, right? If you look at the market, there's really no Reddit. Thank you. There's really no reason to panic sell into a market like this. You're really just giving up. You're really just creating more pain than is necessary. So it's on Reddit, we say. Okay, let's go ahead and pull up Reddit. Let's see what we've got on Reddit. You know, if somebody could just link it really quick, I think that'd be ideal. What I do want to hold. Give me 1 second here. We're gonna pull up Powell here for a sec. But it's gonna take me 1 moment. I'm actually gonna have to remove that. Hold on 1 sec. It's a little annoying, I know. My bad. Hold on. Oh dear. Yeah. I'm like a switchboard operator. There we go. Old school switchboard operator. That's what I am. Old school switchboard operator. All right, so let's go to Jay Powell for a sec. I do somewhat want to listen to what he's saying. Okay. All right, should be good.
Maximum employment and price stability objectives. The review involved extensive outreach to a broad range of people and groups, including through a series of Fed Listens events. As described in the February Monetary Policy Report, in August, the committee unanimously adopted its revised statement on longer run goals and monetary policy strategy. A revised statement shares many features with its predecessor.
This is just the same crap he's always said. Thank you, by the way, Drew, for course member Drew, for linking me the call.
We emphasize that maximum employment is a broad and inclusive goal. This change reflects our appreciation.
He's just, look, Jerome Powell right now is literally going to waste like hours of our time just talking about the same thing that he always talks about, which is, bottom line, he believes that there. Oh, look, this is very important because maybe you haven't watched it in the other videos, so I got to touch on it. Jerome Powell believes that inflation is going to show up in March, April, and May, solely because we're going to compare data to last year. And based on last year's data, it will look like we have inflation. Jerome Powell also believes that once the economy opens up again, we're going to see inflation. And so there are two moments that Jerome Powell sees that we're inflation coming. However, Jerome Powell strongly believes that that inflation will be fleeting. It'll be here and it'll be gone. It'll disappear. And so Jerome Powell argues we're not going to raise rates anytime soon. I personally believe we're at least 18 months away from any kind of rate increase. And every day that goes by without them starting to taper bonds, I think we're still 18 months away. So I think that's the big signal as to when they will start beginning to raise rates. But let's see here. Okay, so we got the call here. Let's listen to Jerome for a moment. Let's see if he's saying anything new. I doubt he's saying anything new, but we'll keep going.
Labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. In addition, we will continue to increase our holdings of Treasury securities and agency mortgage-backed securities, at least at their current pace, until substantial further progress has been made toward our goals.
Bingo.
These purchases and the associated increase in the Federal Reserve's balance sheet have materially eased financial conditions and are providing substantial support to the economy. The economy is a long way from our employment and inflation goals, and it is likely to take some time for substantial further progress to be achieved. We will continue to clearly communicate our assessment of progress toward our goals well in advance of any change in the pace of purchases. Since the onset of the pandemic, the Federal Reserve has been taking actions to more directly support the flow of credit in the economy, deploying our emergency lending powers to an unprecedented extent, enabled in large part by financial backing and support from Congress and the Treasury. Yeah. Although the CARES Act facilities are no longer open to new activity, our other facilities remain in place. We understand that our actions affect households, businesses, and communities across the country. Everything we do is in service to our public mission. We're committed to using our full range of tools to support the economy and to help.
Look, it's the same thing, folks. We're going to go back to the candlesticks here in just one moment. I'm going to quickly type this URL in here. Hopefully I got this correct. Of course I screwed it up. That's all right. Let's see if I can airdrop my copy and paste. That'll be cool. Let's see if it works. Oh, I think it did. Oh, that was dope. One of the few things Apple does very well. So I want to just reiterate here because it's so important. If there's anything you take away from this live stream right here, folks, it's please, whatever you do not look at your portfolio's value today. And I know that 90% of you already have, and you're already feeling like crap, and you already feel like you made mistakes, and you already feel like a dummy. Just don't. There's a reason. Obviously, I don't feel like I've made any mistakes because this is normal. The market does this. It's entirely normal. Okay, let's pull up. Okay, cool. So I got the meeting here. And if anything, the best thing to do in these cases is to add to your positions that you have high conviction in. And that's exactly what we have continued to do, as I've demonstrated in the live stream here. And I will also demonstrate on the course member live stream when I do some repositioning at that time. All right, let's take a look here. Tesla is continuing its run back to 700. Let's see. Okay. Very strong recovery. Very strong recovery. I mean, take a look at the various different candlesticks here. Let's go through the candles again because we've had a pretty big recovery here. Okay, here we go. Let's plow through these. So, AMC is giving up some of its gains, but it's maintaining that 7% lead today, which is very strong. We've got a little bit of the ups green candlesticks happening again here. We've got Wynn Resorts up 3%. We've got a marijuana play that's moving up slightly, but this has been around 50 cents for a while. Not in that one. We've got Cheesecake in the green. We've got actually Cheesecake moving to the positive here because Cheesecake was in the negative. We've got Dropbox slowly trying to move to the positive. Starbucks slightly negative, one of those that has done very well here. Twitter has actually done very, very well today. Twitter did sell off a bit, but not much, going down to 66. I mean, we're talking about maybe a 5% sell-off that has now started to evaporate. Then we have Costco, Tootsie, why is Tootsie Roll on here? Walmart, Target, and some of these other stocks, just actually very, very modest on the sell-off here. Very, very modest. So let's see. Yeah, we need to play the yeah. You know, we should. That's actually not a horrible idea. Hold on. Let's pause Jerome Powell here. Remember, folks, one of the most important things you could do here is type this in, okay? Just all you have to do is you go to YouTube and type in buy the dip and go to the third thing here and then click play.
Your boy Kevin just lost lots of money. Oh, but that's okay. I am with you, with you. Oh, man. Your boy Kevin just lost lots of money. Oh, but that's okay. I am with you.
Here we go.
Here we go. Come on. Push it. Buy the dip. Buy the dip. Here we go. Come on. Push it. Buy the dip. Buy the dip. Here we go. Come on. Push it. Buy the dip. Buy the dip. Here we go. Come on. Push it.
See? How can this not make you happy? You have to buy the dip. Very, very important. Let's continue to look at some of the damage that we've got here. Look at this. Pinterest has fallen under 80. We had a very brief, probably single execution over here at $70, which is, I mean, Pinterest under 70 is just an absolute gift from the gods. We've got SunPower down negative, about 3% here. AMD, Beyond Meat, PayPal sitting around the 3% range. Not a big deal at all right here. We've got... wow, look at the Tesla recovery, folks, from 13%. From 13%. And we bought the dip on this. From 13% down and now to only down 3.5% and accelerating quickly. Look at Tesla's recovery. Very, very powerful recovery here. Very, very nice. This was a very good dress rehearsal of your wills. Obviously, it's a very rough market, and it's so important to stay level-headed in these sorts of markets. So hopefully you found benefits. By the way I've acted in the last hour is just a sample of the way that I teach to respond to market action in the Stocks and Psychology of Money group. Very, very important. It's red days that you want to have as much education and support as possible, because that's usually when you can make the biggest mistakes. Sue, make sure you watch lecture 1.1, and then you'll be able to sign up for you'll be enrolling in all of the alerts. But you do have to watch the 1.0 lecture. So let's see, Zoom video. Zoom actually staying very close to 400 here at 375. Zoom has been trading sideways probably for about 2 months now. Let's take a look, zooming out on Zoom here. Yeah, it's just really a sideways trade here since December. A lot of enthusiasm when we had cases going up, but not so much right now. All right, let's pull back here a little bit. Palantir back to 26.50. That's actually right where I bought about 8,000 shares. So right about par with that purchase. Well, wow, the market has really incredibly recovered. I mean, very good food company. I'm pretty sure they were down like 13 or 14%. Although we do have a red candlestick forming now. It's nowhere near what we started. Oh, sorry, let's go to the day here. There we go. It's nowhere near as low as it went. So very, very good recovery here. HelloFresh going under 75. Tattooed Chef here at about negative 6%. EXPI recovering, bouncing well off 60 here, bouncing up to 66 now, 67. Square, we saw this at 232. In fact, we mentioned right there. I'm like, oh wow, look, it's at 232, right where I mentioned it the last time. Let's see here. Okay. We've got Hyliion Hyliion dropping about 7%, but also recovering, but still down about 7% in the day. Nano Dimension. So now here are the ones that are continuing to stay down right now. I don't know, Gores is recovering. Matterport is still recovering. This is having a little bit of a struggle right here around this 1922 region here. We've got, let's take a look here at CCIV. Where's CCIV? Churchill Capital up to 38. So we did a good purchase there at 35. So that's good. So even though that increases your cost basis, it doesn't matter because you want to deploy additional capital when you have it. Tesla softening here, bouncing off this 694 here, falling a little bit. So if you haven't bought the dip on Tesla yet, so to speak, let's see when we get another support level here. We know we've got support here at about 668. I'm not sure if we're going to fully retrace to this. If we do, I might add a little bit more to Tesla. Etsy, let's look at Etsy's chart here. Same thing for Etsy. Yeah, that $200 level for Etsy is very, very common for us to see a support at $200, $201 here. So let's see if we retrace here. I don't think we will. I think a lot of the pain for the day is already beyond us, which is very good. I don't think we're going to retrace these lows that we've seen here, these terrible lows. I do have the CCIV Zoom call up right here. But this is, I don't know how entertaining that is going to be, so we'll just probably pop in and out of that. Let's jump on over for a moment and buy the dip. Oh no, actually I have the volume off on that. Let's listen. Let's see what Jerome's saying right now. Jerome. Okay.
To what's happening in markets right now, monetary policy, I would certainly agree, is one of them.
Yeah, I would just suggest that, right, I agree. All of those things are happening. All of those indicators of growth and increasingly indicators of rising inflation. As you know, the TIPS 10-year break even on inflation is now over 2%, up from 0.6%. My point is that at some point, we've got too much liquidity going into the system. The economy is recovering very, very well. Problems are isolated and should be addressed narrowly. And I hope that $120 billion a month of bond buying doesn't become a permanent situation.
It will for now.
I'm concerned about, I wonder if you could comment on the risk that we would have an increase in inflation, an increase in bond yields that would correspond to that, but without being back at full employment. What is that? What would that imply? Which I think is a very plausible scenario for later this year. What does that imply for the bond buying program?
Let's hear this.
Well, so what we said about the bond buying program is that it will continue at the current pace, at least at the current pace, until we make substantial further progress toward our goals. And we've also said, as we monitor that progress, we'll communicate well in advance of any actual decisions, purchases. And so that's what it will take for us to begin to moderate the level of purchases. It's substantial further progress toward our goals, which we haven't really been making for the last 3 months, but expectations are that will pick up as the pandemic subsides.
Yeah.
Well, thank you, Mr. Chairman. I would just suggest that there are a lot of warning signs that have not been worrisome in the past, but now are certainly blinking yellow. And with that, I will yield.
Thank you. That's all you're going to say? I see blinking yellow. I mean, that's fine. Whatever. So I want to talk about this though. What they just said, and we do not have the CCIV Zoom has not begun yet. I do want to say, and this is very important in my opinion. I just want to make this super clear. What Jerome Powell just said is very crucial. He reiterated, and it makes sense that he would on a day like today, but he just reiterated that they do not plan to stop buying $120 billion of bonds, $80 billion of treasuries, and $40 billion of mortgage-backed securities. They're not going to stop doing that until we have made a substantial economic recovery. That's really, really good. Because in my opinion, we're not going to see interest rates actually go up at the Fed until 18 months after they begin reducing those bond purchases. And Jerome Powell saying we basically have no no plans of reducing those bond purchases. Okay, so the CCIV presentation is up. I don't know what this is, so I don't know how much. We're probably not going to spend too much time on this, but we'll see here. So we'll keep this up. Let's mute Jerome for 1 second. Just see if there's any audio on this.
As an exhibit to such Form 8K for a discussion of such risks, uncertainties, and other factors that can affect the proposed business combination.
Is this guy seriously just gonna like read boring stuff? We'll come back to this. Let's look at the charts here one more time. If they're gonna read boring disclosures and stuff, we'll come back to that. You know, we can always read their disclosures. So disclosures are very important. Okay, let's see what's Tesla doing right now. Let's see if Tesla has continued to move down towards that that line that we drew. Where are we? Tesla, where are you? Okay, it's actually it's almost stabilizing right here. You know, I can't really call 680 a support yet, but it's definitely slowing its descent right here, down about 4.5% on Tesla right now. Oh, we'll see how that candlestick ends up. But we might see a lot of this right here, where we see these temporary pauses. Oh, we're breaking through that right here, which isn't really a support level. I mean, we don't really have anything here. Right? We're just drawing on a chart at that point. But we don't have the acceleration to go back here to 668. Okay, let's briefly look at this presentation again. Let's just try to see if they're saying anything. Here's Peter. Hey, look at that.
Hills. I'm at the Beverly Hills studio, our flagship studio here, which we opened just a few months ago. We've got a very busy agenda for you today, a very thorough presentation. But to start with, I'd like to present a video to set the stage. Please play the video.
Well, they try to play that. I just commented, yo, go back to $12 billion at $10 a share. Come on, Peter. Hit play. It's right there. Oh, come on. This is the Super Bowl ad, isn't it?
The future.
No.
It's impossible
Look,
to see.
No.
And when it's
He's not even staying there. Look at that. He left. That's stupid. All right, go back to the market here. Short the stock. Okay, we'll come back to that. We're not going to listen to their 30-second ad here. We can watch that a different time. We got to focus on the market right now. We definitely want to focus on the market. Where did AMC go? AMC really retraced out here. So, you know, came out of the gate, out of this V-shaped recovery here strong, but has really given up a lot of its gains. This is not a trading day today, but we kind of knew that when we woke up this morning. This is a great day to add to your buy and hold positions. This is a great day. I mean, look at this. End face down at 161. I mean, that is such juicy pricing right now. So juicy. Pinterest at 78, definitely selling for a bit of a premium over where we have been, but it's still very, very good. What do you got to say, Mark? What do you got to say for yourself?
a 7-minute video. I think we just saw the 30-second ad part of.
Yeah. No, we're not going to watch a 7-minute video. Oh my God. We'll pop in and out. We'll pop between this and maybe Jerome and the candlesticks. Let's see what they're saying.
A warm welcome to everyone joining us here in Lucid's headquarters. We'll see the fusion of the art and the science, the technology.
He's going to play us a 7-minute brainwashing video. No, thank you. Tell me when you've delivered a car. Sorry, that's evil. That's evil. Let's go to Jerome. This is more important.
Chairman Powell, thank you for your service of a number of years and how you
accelerate the adoption.
Oh, sorry. Hold on. I got to figure out how to stop. How do I mute this? Select speaker. No. Audio settings. How do I, you know what can I just kill? Output volume. Yes, 0. Okay, that should be good.
By rethinking from the ground up every...
No! No, how do I not leave this? But mute this. Ah, stop. Here, maybe I'll do, no. Yeah. Oh, that might work.
An important factor as we go forward, assuming in the next say, 6 months that we get a handle around COVID in the country, and Europe, for example, does the same thing.
So I'll take those one at a time. On inflation, let me say that we do expect that as the couple of things. One, first, as the very low readings of last March and April drop out of the 12-month calculation as we move
Here it is. This is what I was just saying.
Readings on inflation to move up. That's called base effects. That'll be a temporary effect, and it won't really signal anything. More importantly, though, with all the factors we've been discussing, you could see spending pick up pretty substantially in the second half of the year. And that would be a good thing, of course, but it could also put upward pressure on prices. And I would just say that essentially it doesn't seem likely that that would result in very large increases or that they would be persistent. We've all been living in a world for a quarter of a century and more where all of the pressures were disinflationary, pushing downward on inflation. We've averaged less than 2% inflation for more than the last 25 years. Inflation dynamics do change over time, but they don't change on a dime. And so we don't really see how a burst of fiscal support or spending that doesn't last for many years would actually change those inflation dynamics. I will also say there's forecasters need to be humble and have a great deal to be humble about, frankly. But so if it does turn out that unwanted inflation pressures arise and they're persistent, then we have the tools to deal with that, and we will. Shall I continue? So on the balance sheet, we're going to continue we're at a stage where with 10 million people, payroll employment is 10 million below where it was before the pandemic. We're a long way from maximum employment. We're going to keep the balance sheet's going to continue to provide the support that we think the economy needs. Over time, the growth of it will slow, but that decision is the one that we talked about earlier, where asset purchases will continue until we make significant further progress toward our goals. You ask about the U.S. economy and the world economy. I do think, and many forecasters agree, that once we get this pandemic under control, we could be getting through this much more quickly than we had feared. And that would be terrific, but it's not done yet. The job is not done. That's the thing I keep coming back.
CCIV is about to break over 40 again. We did just buy at 35.
The economy can really reopen. Other countries around the world have the same set of issues. But people will get vaccinated and we can get the disease under control properly. The second half of this year and thereafter, the economy could be very good, and could be good elsewhere in the world as well.
And the fact that the savings rate has gone up tremendously in America, does that bode well in the future as far as perhaps economic activity?
So a lot of that just is that people have not been able to spend. They haven't been able to travel, go to restaurants, and that. So it's forced savings in a way. So they'll spend some of that going forward. You're really thinking, I think, about the fact that the U.S. needs more savings so that it'll have more investment and more productivity. It would be nice if we had a higher savings rate, and it would be also nice if we didn't have a lot of dis-savings at the federal level. A lot of it is that these budget deficits require a lot of assets. Not that that's something we need to turn to again, but I think this is not the time to be thinking about that. But that time will certainly come.
Thank you, sir.
Thank you. Thank you, Senator.
Thank you, Senator Shelby. Senator Tester.
What a nice opportunity. What a gift buying Tesla so low was, right? Again, one of the reasons it's so important that we don't panic in this. It can feel so painful when you see your portfolio red. And guess what I did today? Didn't even look at my portfolio. I don't want to know how red it is. What difference does it make? Am I gonna did I lose a limb? Doesn't matter. It's a number.
Monetary policy, and so I'm glad you're at the helm. I also think that we're going to...
Okay, this guy's boring, so let's jump on over for a sec to Zoom here. The host has disabled attendee chat. Oh. They're still on their marketing video here. So, yeah, cool. Yeah. All right, drone footage. Yay. Yeah, I mean that's a video that I think is more important to watch later, because I think there are more pressing things for us to look at right now, especially opportunities to keep adding to our portfolio here. So I've made 3 purchases so far today: Churchill, Matterport, and Tesla. Let me find Enphase. Let's see, what do we got? Redfin. Redfin's retracing nicely here as well. Gosh, went down to 81. Yeah, we had such a flash crash moment there. I mean, this is like going back to like March 23rd, zoomed into just like one day, March 23rd, and like the weeks afterwards. Just that V-shaped recovery that we saw. Still a lot of leftover pain, obviously, in the market. So Matterport under 20, I like. I would be surprised if we run back over 20. Redfin, Palantir, 2670, great. 2670, also moving up nicely here. Everything's really recovering nicely right now. Churchill Capital. Okay, Matterport. Yeah, good, strong recovery. I will be live with course members in about 45 minutes, and we'll talk about a sell strategy in an environment like this. I might even do a little bit. I'll show you exactly what to do, in my opinion, for entertainment purposes only. Let's listen to Jerome again.
As broadly spread as possible. Now, so let me be more specific. It amounts to investing in people, and that means education, it means training, it means all those things. And that enables those people to take part fully in our great economy. And I really do think in a global economy, people who are able to use and benefit from technology, there's no limit on the amount of those people who can be working in the United States, because it's such a global economy. I also think it's important for businesses as well that they have a climate where they can trust, that inflation is going to be under control and that business conditions are going to be good, and that they can invest in. And I think the federal government investing in basic science over time has produced a lot of productivity enhancing things. But more generally, Senator, I think focusing on things that will make a longer run difference to our economy is what I would do.
Okay, appreciate that. Now I want to go to housing, because I talk about Montana, but I think this is true all over. We don't have enough affordable housing.
Okay, now they're going to talk about affordable housing. We know the real estate market has been pretty insulated here from the market. Let's jump on over here. Look at this, folks. Look at CCIV. Very, 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 very strong recovery right now. In fact, we are actually recovering above the sell-off from the aftermarket hours yesterday. Very large recovery at CCIV. This is, by the way, happening at the same time as the investor presentation is playing. I did add a chunk of this at 35 here on the live stream. We've got Matterport at just under $20 that we added to as well. We added we added AGI yesterday, API yesterday, not AGI. AGI was added yesterday. API, what am I saying? There we go. Redfin does report tomorrow. Could be an opportunity to pick up a little bit of Redfin. I might do. Let's see. I'll save that. I'll save that idea. Very good food company. Etsy. Oh my gosh! Look at Tesla. Look at the recovery on Tesla, folks. This is the power of diamond hands. In fact, yesterday I'm going to read something here that I sent to course members. What was it? The market is designed to separate weak people from their money to enrich those who maintain their beliefs. That's what I said yesterday to course members as an alert. Not that you want like fortune cookie inspiration every day, but I do think that's very, very true, especially in a market like this, because it's so easy to panic. Oh my God, oh my God, oh my God, and sell. And it's the worst thing to do. This is exactly the time that you want to maintain that your sell button is broken, that you add with strength to where you have your most conviction. You saw me spend, what, $200-something thousand? Yeah. Let's see here. Okay, we've kind of had a little bit of a peak here, 43, softening a little bit. Yeah, Marathon MicroStrategy. It's reverse Robinhood. Sell button broken. Buy button works. Do the reverse Robinhood. Oh, I love that. That's really good. There you go. Well, I mean, that's different, a little different. Yeah, there is a Warren Buffett quote where he talks about it's a tool for transferring money from the inpatient to the patient. That's different than the message that I'm sending. My message is it's obviously it's similar, but mine's a little bit more geared towards when you're in a market crash. There's no necessarily feeling of impatience. There's a feeling of fear. And so that change is very different, to realize that feeling of fear we get when the market is red is a feeling of weakness. It is a moment of, oh my gosh, I feel like I've made a mistake. I feel like an idiot. Like, it's not a matter of being impatient or patient at that point, right? When we zoom into today, we look at the scope of an hour where we had this insane, essentially market sell-off and disaster within the first hour here. This to me is not necessarily where that, this is not Tesla, hold on, where that quote becomes highly applicable. I get it. You can apply it. You could stretch Warren Buffett's, but I like my version where we're talking about transferring money from weakness to strength. And you don't want to be weak in times like this, because what's the point? Like, you could literally, and I said this yesterday. Here's another thing I said yesterday. I said, if you're feeling like SHIT, buy $100 of the stock you feel crappy about right now, then log off. Have a tea, drink, a Topo Chico, go hug your family, go play Rust, and forget about it. Because ultimately, it doesn't matter if your stock portfolio goes up or down. It's just a stupid number. It does not define you. And in the long run, with our high conviction plays, they always come back. They always have come back. So this is nothing other than an opportunity. So let's keep going on what we got here. Palantir. Is Palantir on the move now? Palantir. Okay. Yeah, Palantir is definitely trying to move up. Tesla has bounced very well and is now over 700. So very, very good job here. It looks like we did end up supporting, and we had drawn a line, but actually deleted it. But we did end up supporting here at about 680. And now we're moving up again, creating another level of support. We're staircasing up. This is a beautiful pattern here. This really shows you elevator down, staircase up. A very, very impressive crash and recovery that we've had here, all in a very short period of time. This is a very incredible learning opportunity here. Let's listen to Jerome again.
Say on inflation, there perhaps once was a strong connection between budget deficits and inflation. There really hasn't been lately. That doesn't mean it won't return. But again, my expectation will be that inflation will probably be a bit volatile over the next year or so, due in a significant amount to particular things to do with the pandemic. For example, we'll see a slight increase in inflation in a few months because of the base effects that I mentioned. We'll also see, perhaps, we don't know this, but we may see upward pressure on prices as the economy fully reopens, a good problem to have. I don't think that those effects should either be large or persistent. And the real reason for that is that we've had decades of well-anchored inflation expectations, meaning that we've had a very volatile economy for the last 15 years. And inflation has just kind of done what it was going to do. It didn't go up.
Thank you very much, sir. I appreciate your
doubling down, reiterating what Jerome believes about this market, that inflation will come in these small spikes, but it's not here to stay. Very, very, very powerful, especially for Jerome. I mean, ironic that he's speaking today. This was pre-scheduled, and so that's great. Quick shout out to some of the folks here who have signed up just in the last bit here. So Sheraton, welcome aboard into the real estate course. Jonathan, stocks, Pepper, Joaquin, Brad, Ed. Welcome aboard the stocks group. I look forward to having you in the stock member live stream, which we'll be doing in about 35 minutes. So watch lecture 1.1. Owen, you'll get enrolled. So Churchill Capital supporting out a little bit here. So we've got a support right here that we're creating. We're creating this support around here at 41.28. And it wouldn't. So this is actually, we are now improving above what happened previously. In what happened previously, I mean, yesterday by that, right? What happened yesterday is the market sold off about 30 to 33% on this dramatic reaction to a revaluation. And the sell-off was actually justified at about 30%. It is a justified revaluation of the company at a 30% loss. So the fall of 30% on CCIV yesterday was, in my opinion, like if somebody said, "Hey, here's how the rules changed. What do you think the stock did today?" My math would have said we would have been down 33%, just solely based on the information we got yesterday. However, that is a temporary adjustment. And the reason we're actually only down 26% right now, in my opinion, is because we have confirmation that this Lucid deal is happening, right? That is, in my opinion, very valuable. And so now, even though we've had this revaluation, we're actually starting to see that upward trend again because people are now interested in this company as an opportunity to invest in longer term. Oh, he's just going to go through the slide deck. Oh my gosh, no. I'll do a video on the slide deck later, but this is intense. I mean, here, I'll play it for like a minute, but it's I don't want to read the whole slide deck with them. All right, there we go. It's a little easier if I do it this way. Hold on one sec. There we go. All right, let's pop. There we go. So let's listen in here.
The prospect, the proven technology that it's got. It's a tech company. It gets it. Other car companies don't get this. They don't recognize it's a tech race. Tesla and Lucid recognizes this is a technology race. Now, any company is only as good as its people. I'm blessed to have a real outstanding executive team. You know,
this guy, I'll tell you, this guy is the same, or not the same. This guy is literally the best sales guy ever. The voice and just everything about him, it's so perfect to sell you on this vision. I will be breaking down the slide deck in detail. We're not going to go through their version of a 70-page slide deck here while at the same time the market is crashing. We are instead going to look for opportunities in the market. So we're going to lower this. Sorry, Peter. Get out of here. Here. You know what? You could go right here. There, that's where we'll put you. All right. So Powell signals Fed to keep buying bonds. Yep, we just heard him say that. Let's listen in.
On some of our 10-year benchmarks, it's still relatively small. I tend to agree. I think we do need to make a sizable investment right now. I'm not sure. All
right. I think they're still talking about affordable housing here. Let's go to full chart here for a moment. Whoops. There we go. Full chart. They're all in the design studio over there. All right. So what do we got here? Look at Churchill really recover. Bouncing off this right here, we're seeing now a real recovery of this 30% sell-off, basically getting worked off now, getting removed from the market. This is one of the reasons so dangerous to dump shares in like after hours. Matterport really flattening here at about 20. Look at that solid resistance we've hit here. Really rough resistance. Let's draw. I mean, I don't think we really need to draw a line, but I guess we'll do it anyway. Look at that. Refusing to go over $20. Probably a sign that people have limit orders set to dump Matterport at 20 in this particular case here. Do have a little bit of a red candlestick here, bringing us down to 1967 here. Okay. FRX actually trending down again after recovering. Yeah, nice sort of, here's our crash, here's our recovery, and coming back down, sort of a little wake up to everyone in the market. Like, whoa, that could happen fast, you know? And it does happen fast. Crashes can come and go very, very quickly. It's not to say we won't have another red day tomorrow either. Tesla breaking through its last level of support. Let's take a look at this. So we're red candlesticking again here. Got a breakthrough of the 700 support level. We'll see if this brings it down back to 682, or if this is just going to create a new support somewhere at, just slightly below 700. We'll see. Oh, excuse me. I gotta get some coffee. How did CCIV market cap go from 8 bill to 11 bill? Yeah, you're looking at the actual stock of CCIV, and there was a revaluation there too. But you don't want to look at CCIV. What you care about is the valuation of Lucid. The valuation of Lucid is 24 billion times whatever the share price is now, divided by 15. So the other way you could do that too is you could do, yeah. So at $15, 42.27 divided by 15 is a multiplier of 2.81 times 15. We're at about that seems too low. Hold on a sec. 24. No, that's too low. 24 is at 15, right? So 42 divided by, 15 divided by 15. Yeah, 2.8. Oh, 2.8 times 24. There we go. $67 billion market cap is where we are right now. $67.2 billion market cap. It's usually, if you ever do math like that, one of the things that I found is write it down. Like if you actually take a piece of paper and you label your math, it becomes a whole lot easier to make sure you're not screwing up on your math. So good recovery though. Let's see if it stays above this new support level that it's created. We'll see, but very, very, very good recovery at CCIV. We've got AMC 7.1% here, doing very well. Energy Transfer was in the hole this morning. Oh my gosh, very strong recovery here at Energy Transfer. Yeah, look at that hole Energy Transfer fell into. Absolute cluster of disasterness. Churchill. Okay, let's go back. Let's listen into Jerome for a sec while we look at some more of these sticks in the news here.
That in Congress are taking to facilitate our economy's recovery.
So I do think that the SLR exclusion, I know it expires at the end of March, and we actually haven't made a decision on what to do. It's something we're in the middle of thinking about right now. And so I'm just going to have to say that we'll be making a decision and announcing that pretty soon.
Take a look at this. Powell, Fed to pretty soon decide whether to extend temporary capital relief to banks. The banks seem pretty well capitalized. I'm surprised they'd even be talking about it.
That's in. They've got to have a place to put it. It is liquid. It's what we're going to have. Most certainly that has impacted our ability and the reason for the SLR in the first place. And it just seems to reason that as you talk about it and as you continue to discuss it, I hope that we really do keep an open mind, and I presume you are keeping an open mind on the need for that, as this amount apparently will be put into the economy in very short order. And so I simply bring it up as saying I think there's a lot of us that think that that's going to be an important part of the discussion to have. Let me lead into another question with you, sir. We've been monitoring the increase in Treasury yields from about 0.9% at the start of
this. Could be a good question.
To approximately 1.37% when the market closed yesterday. I understand that this reflects a view of an improving economy, but also comes with increased borrowing costs, increased inflation, and potentially a move by the Fed to increase interest rates down the line. How do you view the increase in Treasury yields in the broader context of our economy at this point?
So first, we look at a broad range of financial conditions, and that's one. It's an important one, but really we look at the whole range of financial conditions, and it's very important to ask, why are rates moving up? And so if you look at why they're moving up, it's to do with expectations of a return to more normal levels, more mandate consistent levels of inflation, higher growth, an opening economy. In a way, it's a statement of confidence on the part of markets that we will have a robust and ultimately complete recovery. So those are the reasons that are behind it, that are behind that move, I would say.
Great. Well, thanks. We follow the markets. We follow on a regular basis whether the markets are moving up, they're moving down, and so forth. And I think in anticipation of what your thoughts were going to be today, I think the market was rather volatile. I'm just curious, when you walk into an opportunity like this where you're sharing your thoughts, I know that you want to be very careful in terms of the message that you send, and I think you do a very good job of being very careful in the way that you send the message. But let me just ask, in your opinion, when you prepare for this type of a discussion, knowing the markets are literally watching everything you say, what's the message that you'd like to send? Are you talking, we're going to have stability, it's going to be steady as she goes, we don't see changes coming up with regard to the availability of capital, we don't see changes that are going to impact inflation? What's the message that you really want to send as you share with us today and you're expected to be in front of our committees?
So I guess I'll say a couple of things. First, the starting point is that we're 10 million jobs below where we were in February of 2020, 10 million payroll jobs. So there's a long way to go, and many of those jobs are concentrated in the lower end of the income spectrum, as I mentioned. Many parts of the economy have recovered, but in the bottom quartile, the unemployment rate is probably in excess of 20%, we think. So there's a long way to go. And monetary policy is accommodative, and it needs to continue to be accommodative. We've put forward guidance out both on our asset purchases and our rates. We think that forward guidance is appropriate, and you can expect us to move patiently over time as we see better data coming in. You know, right now we've had 3 months of 29,000 jobs a month. It's not very much progress. We expect that such progress, which we had earlier last year, we had very fast progress. We expect that that'll begin to return in coming months, and expect us to move carefully and patiently and with a lot of advanced warning.
Thank you, Mr. Chairman. Thank you, Mr. Chairman. I apologize for going over on my time.
Thank you, Senator Round. Senator Warren of Massachusetts.
Thank you, Mr. Chairman. So our economy is suffering through a K-shaped recovery where the wealthy are doing better and better while working people are doing worse and worse. And Chair Powell, you've been pretty vocal about inequality over the past few years. You've noted, I think I've got a quote here from you, that it's been a growing issue in our country and in our economy for 4 decades. You've talked a lot about how inequality undermines opportunity and mobility, and you've described it as something that holds our economy back. So I take it from these comments that you believe that inequality weighs our economy down and stunts economic growth. Is that a fair statement?
Yes, it is.
Good, and I agree with you on this. And the Fed's own data spell out the problem. I think you were just talking about it. You know, the top 1% of families last year received 20% of all the income in this country. And you think that's not good for our economic growth overall. Is that fair?
Well, I would say that the stagnation of incomes in the lower income area, and also the low mobility that we've seen emerge, those to me are the two most important things that I focus on when I talk about inequality.
Right.
Just stagnation of incomes and low mobility.
Right. But we're talking about here income inequality, how much people earn each year to be able to pay the rent and to be able to put food on the table. But inequality also shows up in wealth, which is what families build.
Let's listen to this, because she's going to a wealth tax here, I think.
Stock. Wealth inequality is even more extreme in our nation than income inequality. While the top 1% of families, this tiny slice, got 20% of all the income earned in the US last year, the top 1% held 33% of the total wealth in this nation. And now this pandemic is making inequality worse. Unemployment, as you just noted, is...
She, by the way, like her or not, what she is saying is correct. the rich have gotten a lot richer during this pandemic. And I said it early, March, April, May. I always said on this channel, unless you own stocks in real estate, you will always get screwed in this country.
Increased by $1.1 trillion over this past year. Inequality is felt in another way. It's felt in how people pay taxes. The 99% in America pay, on average, about 7.2% of their total wealth in taxes in a given year. But the top 0.1% pay only about 3.2%. That's less than half as much. Chair Powell, does it increase inequality when the wealthiest Americans pay total taxes at less than half the rate of nearly all other American families?
These are, you're getting farther and farther from the, the kinds of inequality that we focus on, and frankly, the ones that we can do anything about with our tools. We can't affect wealth inequality certainly in the short term. We can affect indirectly income inequality by doing what we can to support job creation at the lower end of the market. So I leave to you, those are really fiscal policy issues that I wouldn't.
Basically, what he's saying is that's Congress's problem, not my problem.
Move sideways on this, but you have pointed out that inequality is a problem in our country, that it holds back mobility, that it holds back.
That doesn't mean he can do anything about it.
And I'm simply pointing out that inequality is felt not just in income, it's also felt in wealth, even more so, and that our tax structure makes that inequality worse over time. Extreme wealth inequality undermines our economy, as you have said. It undermines justice. It undermines our democracy. And our tax code focuses almost entirely on income and lets most of the wealth that the ultra-rich families have accumulated just slip right on through. And that just seems to me not right. It's time for a wealth tax in America, a 2-cent tax on food.
What I tell you, she's using this as a platform to talk about the wealth tax. And Jerome's like, bro, this is not a discussion we need to be having. I can't help you with that. She's just using this as a platform.
About as chair of the Federal Reserve, it's how we have a chance to level the playing field and build an economy that works for everyone. So thank you for being here, Mr. Chairman, and thank you, Chairman Brown.
He's like, thank
you, Senator Warren. Senator Tillis of North Carolina.
There's nothing he can do about that.
It's not Senator Kennedy of Louisiana.
Next question.
Yes, sir. Can you hear me, Mr. Chairman?
I can't, Senator. You have two Mr. Chairmans here.
Yes, sir. Mr. Chairman.
Jerome coming in with the jokes. A Federal Reserve and Congress joke. It's a real slapper.
I'm reluctant to guess, but it was in the, I want to say 4%.
Right. That's what my numbers show too. What are you and your economists estimating that our GDP growth will be for 2021?
So we,
oh, what? Go on with the clickbait. Way to fail. Let's try to get this back. Who dropped the ball on this one? YouTube, Federal Reserve. They have their own YouTube channel. Where's the Fed one? Oh, I'll just go to Reuters. Yeah, there we go.
And right now, during COVID, this is a worse time to not be insured.
Oops, sorry. That's definitely the wrong audio.
So you don't have an opinion about whether we ought to pass President Biden's bill?
As I've said since the December press conference, I think on every public occasion when I've been asked about it, I've said that it's not appropriate for the Fed to be playing a role in these fiscal.
Okay. He's not going to comment on stimulus. He basically says y'all should do stimulus. We got it. Let's jump on over and see what the sticks are doing here. And maybe we'll even tune in to see what Peter's doing over here in the corner. We kind of put him into timeout. He's being a little boring. Powell says Fed forecast for 2021 will be a good number. Oh, that's a good one. Fed forecast, I gotta write that down. Fed will be a good number for GDP, because we heard that question. Okay, so I like having the little summary news that comes up over here. U.S. arrests wife of Mexico cartel El Chapo on drug charges. Wow. Okay, let's focus, Kevin. Focus. By the way, I will be live with course members in 15 minutes, and I'm going to talk to you about a selling strategy that works in markets that go down, even though the rule of thumb is do not break the sell button. There is a special exception that I will teach you about. All right, so what do we got here? Look at Churchill. Good recovery. We are at 42.30. Look at that. Oh my gosh. We almost perfectly hit the support line we drew. That's insane. It is a perfect hit of that support and a bounce off of that. Really, really good sign. Really good sign for CCAV. That's money right there. Man, I just got to draw lines more often, because lately these lines have been on freaking point. Let's go to AMC. AMC, 840. In terms of percentage up, good job. It's at 7-11. AMC's at 7-11. Let's see. I wonder how 7-Eleven's doing these days. Let's see how Tesla's doing. Tesla. Okay, Tesla. Yeah, we never really thought this was an actual support level here. This was so weak. When we drew that, we mentioned that who knows if it's building here, and it clearly is not. So we'll get rid of that. Instead, it does look like it's potentially retracing here to this 681. If Tesla bounces off the 681, I might buy a little bit more. I think that'll be good. I think that could be good TA here. Kevin, get ready for another member live stream. Is that like a reference to the coffee? No, I love our member live streams. We get a lot of questions we go through, but it's really good. You all get a lot of time to ask questions. Today's the day to ask questions. Here we go. Is this gonna happen? This might, oh my God, this might literally happen. But we don't know if it's going to break through. Hold on, let's see what's happening here. So Tesla's doing the give back right now. I do want to be prepared. Okay, so we got a 60. I want to make sure this is Tesla. Yeah, there we go. So I got a $68,000 order queued as a potential here. You know what I might do is I might just set a low limit really quick, because I could just drag it up. So let me set a limit here, 650. I'll go 650. I'll go 200 at 650 on a limit. This. I'm not planning for this to execute. I mean, it'd be cool if it did, but I'll be able to drag this up, and then I'll be able to execute a little faster if I needed to. CCIV is not risky. It's volatile. Very, very important that you know the difference between risk and volatility. Now, CCIV is more risky than Tesla. There's a level of risk. But in my opinion, I don't view CCAV as just inherently risky. Okay, let's see here. In theory, every stock is inherently risky if you compare it to a bank account. Here we go. Are we going to bounce off this? We could literally just bounce right off the support line here on Tesla. Tesla plans to have 80% of his portfolio in Tesla after this correction. Look, I get a lot of hate on the YouTube channel because people are like, oh my gosh, Kevin, you just made all your money from Tesla. Well, it's literally because of 2 or 3 years of playing just the way I am, where I'm making these smaller purchases relative, obviously, for my portfolio, smaller purchases by looking for these dips and adding to them on the dips. It's not like it's just set it and forget it. Okay, so we're actually starting to bounce a little bit higher here. But we could end up breaking down. Let's see what happens here. This is pretty. Let's look at volume and see if we can get any cues here. 100 to 200, 100 to 200 in volume. Over here we were like 200 to 300 on average. 200 to 300. Volume settled down. This could deflate a little bit today. Maybe this is going to break through. Yeah, actually. Yeah. Oh, look at that! Come on. Did we just do that live? Did we just mark that bounce left? Come on. If it breaks through, I'll be able to buy, but no freaking way. Yeah, like, no way. Like, you know what's funny is a common thing day traders do, and I know this isn't to slam anyone, but a common thing day traders do is they record a video and then they post it. There's not a lot of live day trading going on. And I think if you're going to watch day trading, you should watch it live, because I have absolutely no freaking idea what's going to happen here. A lot of day trading is talked about in the past. You listen to recorded videos where it's like, oh, this is what happened, and we knew this was going to happen because this happened. Well, you knew that in 2020 retrospect, right? Like hindsight is 2020. Here. Mouse. Oh no, I ruined it. I ruined it with the mouse. I ruined it. That's too funny. That's too funny. I literally ruined it. The mouse up. Oh, that's funny. But yeah, I mean, seriously, we have no idea what's going to happen, right? It's just you're trying to look at the chart as best as possible. And we are getting resistance around this level here. I'm interested in potentially adding once we confirm that we've got this rebound. We'll see what happens. But that is too funny. Way too funny that we even paused there for as long as we did. We're breaking through it a little bit now, but that was entertaining. I appreciate that. Okay, we'll come right back to Tesla and we'll see how much it breaks through that. We do have a limit order set at 650 though, in the event that it does continue to break through that, which it is right now. Okay, we'll come right back to Tesla. That was way too funny. Let's see, that mouse movement cost thousands of dollars. That's funny. I love it. GHVI. You know, I'm getting asked about paper trading. I've never liked paper trading because it never felt real to me, because it's not. So I don't like paper trading. A lot of people recommend you start day trading or just investing with a paper account. I think that's a mistake. I think it's bad. Okay, look at that. Look at that. Revisiting the support that we had over here at 19. Trying to bounce off that as well. Oh, nice crooked line I drew. There we go. Okay, so we keep an eye on Matterport. If Matterport breaks through that, I might want to buy a little bit more of Matterport too. But let's see here. Okay, let's go back to Tesla. Let's see what we've done over here. What damage have we done with our mouse movement? Okay, look at that. It's actually behaving really well around this line. Yeah. Okay, I don't mind. I'm going to buy a little bit right now. Let's get rid of, you know what, I'll just set another limit. Let's go 686. I might adjust that down. 686. And I'm just going to buy a little bit. I know it's relative. I'm sorry. No, 50, that's, 50 is okay. Yeah, let's put 50 in. Let's put 50 in at my line, 684. See if we hit that line. Go pick Kevin up. Let's go. Go pick Kevin up right now. Let's go. Okay. I get my alert. Oh, we might run right past. No. We're bouncing off. No. Oh, it's a lot of volatility here. Let's move this up just a little bit. I do want this to execute. No, I might miss it here. Should we just go? Should we just do it? 686. I mean, we're talking about pennies here, right? Here we go. Oh, I adjusted and it runs. Jerk. This is gonna V-shape off. Oh, wait. It's too entertaining. I don't know why looking at these candlesticks is entertaining, honestly. Come on. I don't know that it's gonna bounce back down. Let me cancel. Let's see where we had it. Yeah, it hasn't executed. Here we go. Come on, pick up Kevin. Pick him up. 688, 617. No, we're over $1 away now. I think it's gonna keep going up. At least right here. We could try. Oh, wait, got it. Boom. Good job. Stuck to it. Got it. Okay. So just another 50 shares of Tesla at 686. Cool. Oh, there we go. Kind of, going back to our line. It's all right. We got another limit right here. But it's really bouncing a lot off this. Oh, is it going to break through? No. This line has been very, very fascinating, I have to say. That mouse movement lost Kevin thousands of dollars. 50 shares. No, I you know, actually, when the pandemic started, I was buying Tesla in somewhere around 30K increments, 25, 30K. But yeah, you know, it's not a heavy buy. You know, we got the 200 share down there at 650. And if we continue to break through this line, we might visit that. But right now we're really rubber banding above and below that. Okay. Yeah, you know, these comments, and I'm not trying to single you out, so I'm not going to put your name up on screen here, but actually there are a few of you saying, you know, don't chase the falling knife. I hate that line because I have made most of my money chasing and catching falling lives. So thank you very much. Like I'm buying my favorite company extremely below my buy target, and I'm getting a fat freaking discount. Whereas Churchill is we did add to Churchill this morning at 35, but I still love my Tesla more. Look at this, folks. NIO, $47. Right? I mean, we were briefly under the 45 buy under target. And I've been talking about NIO going to 45 for like weeks here. Kevin has hundreds of scars from catching falling knives. Yep, maybe I have scars, but I'm still alive. That's lame. Sorry. Okay, let's see what Jerome's saying here. We got another 4 minutes before I got to go to the other live stream. Which, if you want to join, by the way, I am like 200 emails deep. If you do not have your role assignment yet, you can now input that in role assignment. So just watch the. I hope the bot's not down again. That'll really suck if it is. No, bot's up. Input your. Yeah, so you should be able to input your code and manually get in before 9 o'clock. So that way, but yeah, the emails are going to take a little bit to catch up on. So if you're watching this and you sent me an email, my goal is to get back to everybody today. But otherwise, enter the code. It's working. Watch lecture 1.1, sorry. Okay, let's listen to Jerome. Jerome.
Right across the Federal Reserve System, you may know that the Federal Reserve Bank of Boston has a partnership with MIT looking at one particular thing. We're doing research here at the board. It does hold out the prospect of the things that you mentioned, very positive. It could help with financial inclusion as well. At the same time, you want to avoid creating things that might be destabilizing or that might draw funds away from the banking system. We have a banking system which intermediates between savers and borrowers. You know, we want to be careful about what the implications are of what we do. So a very high priority project for us.
I share your concerns on the need to be careful. I also appreciate the fact that you're going to stay at the leading edge of looking at this and making certain that America does not fall behind in any respect in terms of maintaining our status as the world's leader in reserve currency. It was just a moment.
Look, listen, Bitcoin is not going to be, it's not going to replace fiat. So many people think that, and this is my belief. I could be wrong. I just want to be very clear about this. Bitcoin will not be the world's currency. There will be no deflationary currency. There will be fiat, at least for, in my opinion, the next 50 to 100 years. So I do not see any kind of Bitcoin becoming a currency. Bitcoin is, all it is the most popular investment into blockchain-related technology, followed by Ethereum. That's what Bitcoin is. That's it. No payment plan for the courses, unfortunately. However, you can manually do a payment plan by PayPaling me, but then you have to do it yourself, and it's kind of inconvenient. Okay, folks, I have to go to the course member live stream now. Check out that code, HODL. And folks, we'll see you. We got some talking to do in the course member live stream. So we'll see you. Thank you so much for being here. It was really entertaining. Hopefully you did not panic sell. Yeah, hopefully what you learned in this video helped you. And I will see you also at the market close. Thanks. Interview with Matterport CEO is tomorrow. Tomorrow after Redfin earnings. All right, bye.